What is going on, YouTube? I am Germ here. As you guys can see up on the screen today, I want to talk a little bit about Sofi Technologies Incorporated. This is ticker symbol SOFI or Sofi, the exact same ticker symbol as the name of the company. They make it nice and easy for you there. Nothing crazy you have to go out and find. And the reason we're talking about this one today is we always cover Sofi on this channel. It's a pretty popular retail fintech stock that a lot of people like seeing what's going on with it on Twitter, Reddit, YouTube, all over the place. And it's a stock that's very volatile, always has a lot of news, has high growth, it has a lot of potential going into the future, and it had a pretty good day today. You can see up on the screen that Sofi was up 3.29%, which is a good day, especially, looking around the world, seeing everything that's going on right now. We have the Russia whatever's going on, inflation, rate hikes, just overall the stock market not doing great in a lot of places. Seeing something finally go up 3.29% in a single day, that is awesome. When we take a look at the broader market as a whole, everything was doing pretty good today. Dow Jones up big, 2.5%. That is big for an index. 2.24 for the S&P, 1.64 for the Nasdaq, and 2.25 for the Russell. So everything was looking pretty good. SoFi was looking good. Obviously, it's outperforming the indexes on the upside, which is really, really good to see because we know so far in 2022 it's been beat down like everything else has, but it's overperformed the indexes on the downside as well. It's been down bigger than a lot of those things. But we'll be going over the latest news for SoFi today. There's one story I want to talk about in specific. So yeah, definitely drop a like if you guys do enjoy this video. I would appreciate that a ton. And subscribe to stay up to date on all my latest content. As always, of course, there's going to be no financial advice in this video. I'm not telling you to buy, sell, do anything like that. Just giving some of my thoughts and opinions on what's going on in the world. With that being said, let's get right into this one. So we take a look at SoFi. Yes, today was a good day. Overall, kind of a rough week. Like I said, there's a lot of different factors that are pushing this thing down. When we look at the year to date, even more things pushing this thing down. We're still down 33%, despite a 3% update today, still down, 32% year to date, which is crazy. It's less than 2 months into the year to be down that much. But there's so many stocks that if you look at that, they're down very, very similarly. But still, we're at 1067 right now, and our 52-week low is 882. I'm assuming that we hit on Wednesday. So obviously this thing is super volatile, just bouncing all over the place. But I mean, in 2022 so far, we've had the bank charter, we've had an acquisition, we have some potential good news going forward in the future. So to see that things are still down so badly, obviously that has some people thinking, hey, maybe it's time to buy the dip. Maybe this is a great buying opportunity. Who knows? But one of the things I did want to talk about in this video today is that Technisys acquisition. And there's a lot of people talking about whether this is a good deal, a bad deal, whether it has potential, how much potential it has, all that stuff. And the Motley Fool actually put out a free article. They said, will SoFi's $1.1 billion acquisition of Technisys pay off? It's a great question, and so I just kind of wanted to go over this article, read what they have to say, and then kind of give some of my own thoughts and opinions on some things. Obviously, key points, they're saying that Technisys makes cloud-based core processing technology for fintech companies, banks, and more. The deal is expensive. That's one thing investors are worried about, definitely. And will push SoFi further into an industry that is quite different from consumer banking. So I think it's good to, have some, or it's fair at least, to have some doubts and concerns about that. And then the combination of Technisys and Galileo creates a next-generation tech stack that should be attractive to many financial services companies. So some good and some bad, and that's why there's so much debate over this whole thing. But the one-stop-shop financial services company SoFi made a splash coming back from the holiday weekend by announcing it had agreed to acquire the core processing company Technisys in an all-stock deal. That's what some people are worried about as well. That means obviously dilution valued at $1.1 billion, and that's a lot of dilution for a company. SoFi is what, 8 billion? Yeah, 8.61 billion, and we're talking 10+% or like 8 to 12% dilution or something like that. That's tough for some investors to stomach, obviously. Core processing systems are the back-end infrastructure that enables banks to carry out a broad array of their daily operations, such as managing deposits, loans, and other types of transactions. Not only does the price amount to roughly 13% of their current market cap, that is not a small number, but it rivals its previous acquisition of Galileo, which SoFi bought for $1.2 billion. Galileo has been a big selling point among investors. Will SoFi's acquisition of Technisys prove to be the same? So some of the stuff they're talking about, obviously they're calling this the AWS of fintech. When many people see SoFi, they see a digital banking app that offers different kinds of lending and depository products and investing capabilities all packed into one. SoFi is a technology platform division which houses Galileo. This looks a lot different from SoFi's other offerings. And we've heard about Galileo getting some deals with other companies and other financial service industries and companies and stuff like that, which has been good. Galileo, again, another expensive one, but it seems to have been pretty good for SoFi. They've made smart moves so far. The company provides back-end infrastructure that powers the operation of many fintech companies and neobanks, which is interesting in some ways because in some ways it's kind of helping out their competitors, but their competitors are still paying for it, so they're still getting money from them. It can be good and bad. Specifically, Galileo helps give fintechs, many of which don't have bank charters and primarily work on the front-end user experience, the ability to process payments like those for debit card transactions and traditional direct ACH transactions. And then obviously, SoFi's getting a chunk of that. They're getting paid, which is good, while providing them a service that is going to be very, very valuable. They should have, when they get customers, they should be able to keep them. It should be pretty sticky, and they should be pretty attractive to other companies and customers as well. Galileo's been, seemingly a pretty big success. Now, Technisys should complement Galileo, at least according to the Motley Fool. A good way to think about Galileo and Technisys is that they both provide the plumbing needed to power the banking system. Technisys, however, is really a next-generation banking system. It's hard to believe, but many banks today use legacy data tools that could have been developed in the 1970s, which is crazy, and that's good to know. It's interesting. This can limit a bank's ability to innovate as much or quickly as it might like. So, hey, this might give SoFi a leg up on some other competition, and also it might make Technisys very, very attractive and valuable to a lot of other fintechs, which would obviously be great. They kind of go into this some more. Again, they talk about how this could become the Amazon Web Services of fintech, which is obviously a very, very bold statement and claim. They talk a little bit about the complexities of core processing, but the biggest part and what I wanted to get to more is, hey, whatever, some of us know what Technisys does really, really well. Some of us doesn't. If you want to research that, you can. But what most people are worried about is this acquisition going to pay off? Is it going to be a sound investment? Is there an easy way for us to get that, $1.1 billion in value and the 10% dilution or whatever back? Are we going to make our money on this deal? What is SoFi doing here? So, looking at the financials, SoFi is paying $1.1 billion in stock, which will dilute shareholders. They expect the acquisition to generate between 500 and 800 million of additional revenue by 2025. We've talked about that before. The majority of which management is expecting to come from selling Technisys services to traditional banks. In the 12 months ended September 31st, 2021, Galileo generated about 178 million in revenue. So the addition of Technisys will substantially increase the contribution of SoFi's tech segment to the bottom line. Furthermore, SoFi expects to move SoFi checking and savings account products as well as its credit card product to the Technisys and Galileo platforms over the next 2 to 4 years. Putting multiple products onto one core system and integrating Technisys with Galileo will result in about 80 million in cost savings between 2023 and 2025 and about 65 million of annual savings afterwards. So, that's good. That's not nothing. 65 million, not a small number, but in the grand scheme of things and in a $1.1 billion stock deal, is that amazing? That's up for debate, obviously. So overall, it looks like the deal could increase revenue substantially. Obviously, when you throw these numbers back on top of the 500 to 800 they're talking about, then it starts to matter a little bit more. However, it's not like SoFi had to buy Galileo and Technisys to use their products. I never really envisioned a financial company doing both bank plumbing and consumer banking, but they do complement each other. With Technisys and Galileo in-house, SoFi will have control over what kinds of new products are made and then could roll them out to its members before any of its bank or fintech clients. Having an active consumer base will also give SoFi better insight into product improvements and may serve as a place to test them out. Plus, the tech competent and associated revenue streams offer revenue diversity that few of SoFi's competitors have. And that's what my thing has always been. I know some people are saying, hey, this deal is very, very expensive. We don't like the share dilution. It's also going to hurt the growth of SoFi overall because, SoFi has certain growth numbers that they're expecting. Technisys has certain growth numbers that they're expecting. If Technisys, comes in and lowers the overall growth of SoFi because it's not going to grow as fast as maybe SoFi's overall business, that could make it a lower growth stock and you get diluted and this isn't really what you signed up or bought in the first place. I get why a lot of people are concerned. But what I have been talking about is the differentiation between, right now, it's kind of hard to tell the difference between a lot of these fintech stocks. They have a lot of the same services, a lot of the same products. They have a lot of the same rates. I mean, everything. It's pretty much just like pick your favorite app or website or whatever, and you're pretty much getting the same stuff. But if SoFi can actually differentiate themselves by making some of these acquisitions, by making good, smart moves, by being able to have all these different, not only front-facing fintech offerings, financial services offerings to the public, but also have this stuff behind the scenes that they're selling to all their competitors and all these wannabe new fintech and neobanks and all this stuff. That's something that not every one of these new fintechs that keeps popping up is going to be able to do. They're going to be able to have margin and options trading and crypto, and they're all going to be doing relatively the same stuff. But this is one way that SoFi can maybe make themselves a little bit different. That doesn't mean it's necessarily going to be worth it, and I think it's still really, really hard to tell and way too early to tell if this deal is going to be worth it, and that's kind of what they say here. They say, hey, I feel fairly optimistic, but they're not like, oh, this is a great, amazing deal, like SoFi just got away with a robbery or anything like that. So we'll have to see how that goes, but either way, it's just very, very big news, and it's at least exciting. It's at least something. Obviously, the market didn't necessarily take this as good news. When this news came out, I do believe that, SoFi dropped pretty big on the day of the Technisys acquisition. Obviously, how much of that is the acquisition, how much of that is, hey, they were going to drop anyway with the way the market's going right now, who knows, but I can't wait to see what they do with Galileo, what they do with Technisys, how this next quarterly earnings report goes, and to see what the future has in store for SoFi. But that's pretty much it for this video today, guys. Tell me to drop a like if you did enjoy it. I would appreciate it so much. Leave a comment down below. Let me know what you think about SOFI. I'd love to hear your guys' thoughts and opinions. Subscribe to stay up to date on all my latest content. Hope to catch you guys in the next one. But until then, peace.